I'm Allard Luchsinger. I'm a director for Velocity Capital from the Netherlands, Amsterdam.
Welcome to the African Tech Roundup, Allard.
Thank you so much.
You are a fintech-specific VC, am I right?
Yes, we invest only in fintech, and more specifically, early-stage fintech. So we typically invest in a Series A round. So when there's a product and there's some revenue, we typically don't do seed round investments. Right.
Tell me why fintech, and tell me why you prefer to enter at the seed stage.
Right. So to make myself clear, so we typically don't enter at the seed stage.
I beg your pardon. And why you prefer to enter at the Series A stage?
Right. So fintech, because we've been investing in fintech since 2005. So in 2007 we went only fintech. So we've been very committed to fintech for quite a long time. My background is actually setting up a fintech company. So I've been a fintech entrepreneur myself. So what we believe is that financial services was one of the later huge industries to really get disrupted by technology. They've been able to hold back for a long time, but since the mid 2000s, this really started to change, and it's of course one of the largest and most central industries to everybody's lives. And if you look at the whole landscape of fintech, every financial service that you could imagine is being rethought at the moment, or has been rethought. And we see amazing opportunity in actually doing two things. One, helping banks through this big digital transformation. So we invest in companies that actually provide mostly software services to banks to help them really get to this next stage of digitization, and basically also fighting all fintechs, right? And then we believe that there's all these new business models that are really changing the way we use financial services. And we like to be on the forefront of those. And we think a lot of big companies are going to come from that and are being built right now. So this is why fintech. So seed stage is really interesting.
Is it a risk issue?
Yeah, it's a risk issue mainly. So seed stage is really interesting, but in the end, we believe that ideas are great, but it might be like 3% of any success of a company is the idea itself, and we believe it's all about execution and teams. So it's really hard to get any feel for that in the seed stage. So we like to invest when we know that there's a team that actually can build a product, that actually can have some product market fit. So they know that there's people that want to pay some money to get that product. And so when I say Series A, we do pre-Series A, as we call it. So there's a product, there's some customers that have been willing to pay, but we could go very early. So the better we understand the specific segment of that fact and maybe also region, the earlier we're willing to go. But we generally don't go pre-product, pre-revenue.
So give me a sense of the size of your fund and whose money you're managing.
Yeah. So so let's start with the last question first. I mean, one of the things that make us quite different from other VC funds is that we actually don't invest other people's money. We invest one person's money, and his name is Willem Willemstein. Basically, it's his family office, or it's part of his family office. Willem is himself very involved in this, and that makes us very flexible. So Willem was a very successful entrepreneur. He was actually in oil business, built a very large company, IPO'd it twice, and it's in the mid 2000s he really got this whole fintech bug, got him, and he started investing there. I know him because I was the first fintech company he invested in. So we grew up together as an entrepreneur and an investor, and then I joined him, and now we're investing together. So
what was that company?
It was a company called Zecco, which was an online broker, and like E-Trade and Charles Schwab and guys like that. And we started it it was an Amsterdam-based team, but we flew, basically took our families, left for Silicon Valley, built the company there, and then we merged into TradeKing, and that whole company got sold last year. So what makes it different is Willem is a real entrepreneur. I have an entrepreneurial background. We don't have any time limits. We don't have any charters. We don't have any reporting to do. We don't need to raise money. So we spend all our time really helping the companies we invest in to grow. And we do that from an entrepreneurial background, right? We don't have to worry, we have all this institutional money we're managing. We just like to help entrepreneurs build great businesses. And we really try to be, how can we help this entrepreneur from the times that we were entrepreneurs ourselves, and I think that kind of works. So that makes us a little bit different. The second part of your question was how big is the fund, right? So we have 8 investments now, and they're pretty global. So we have an investment in Hong Kong. We have 2 investments in Africa now. We have 1 investment in the U.S., or actually it's a Sweden-based company in the U.S., and we have, and all the rest is in Europe, so in the U.K. and in the Netherlands.
So typically, how do you discover these opportunities, typically, given the unstructured arrangement you just described?
Yeah. So this is also pretty unstructured, right? So we have a small team. It's Willem and me, and we have a senior associate, a great guy. So we so we've decided we don't do FOMO, no fear of missing out. We don't try to get into the next Facebook, the next Google, or the next
Andile
lending club for Andile, right?
I bet you wish you had.
Of course. So it's not that it's not. Of course, we want to invest in those companies, but let's say we don't want to compete to be like always, we can't miss out on any opportunity. So what we do is we've been actually growing pretty organically. We've been finding our companies through friendly VCs that know how we work, know what our specialty is and what our focus is. People coming to us because of the same, and us going to conferences and all that and following the news. But it's not like a super structured funnel where we throw in like the 1,000 top fintech companies and then come out with one. It's been growing pretty organically, but out of our portfolio of 8, no one has failed yet. Like knock on wood, and we've been really able to help these companies to grow and to get to solid stages of being a company. So I think it works the way we do it. Yeah.
And so, given your unconventional approach, your pre-Series A, Series A focus, Africa doesn't scream. I'd imagine. Correct me if I'm wrong. Sitting in Amsterdam, for example, and given the rest of the developing world and how, relatively speaking, in many respects, Africa is still catching up. Africa doesn't represent, from a pipeline perspective, a place that would be flooding you with tons of opportunities. Or am I wrong about that?
Yeah, so 2 things. When we say Series A, so I think what makes us a little bit different is that we get in at the Series A stage, but we always keep investing. So I don't even know whether it is a great statistic, but it's a statistic that's true. And I think it's important for entrepreneurs. We never miss the funding round of any of our companies. So somewhere now in the Series C stage, we keep investing. So the way we invest is we often invest like a smaller amount, anywhere between 500,000 up to like 2-3 million in a first investment, in the first round. But then we hope to get 5 to 10 million in over the lifetime of that company, over our investing lifetime of that company. So we're very loyal investors. So we're also Series B and Series C investors. It's just we do that in the companies that we're already in. And often we take larger tickets in later rounds than we did in our earlier rounds. So then Africa.
I suppose I was asking in the context of Africa not only starting to organize itself around, angel investment syndicates and only starting to come into its own in terms of quite a few prospects and, at the seed stage and that kind of thing. So what I'm saying is in that context, you're not as likely to participate on the continent on the surface, given what you've described about how you go about investing.
Yeah. So one thing is true, right? So we'll never be a household name carrying a large portfolio in Africa because we only have a limited portfolio, and we'll have 15 investments, but we'll not have 40 investments, right? And we'll do those worldwide. So we look at doing 2 to 3, maybe 4 investments every year, and this year we already did Africa, and we might do another one. But so we don't need like to see 40 companies to invest in. So we've made 2 African investments. One is in Cellulant, which is a mobile payment company out of Kenya. It's doing really well. I think one of the real leaders. Very significant revenue base already, growing very fast. And now we invested in Zecco. So why did we choose to go Africa and to invest in these? One is that the opportunity for Africa we see is very in the financial services space is very different than it's in the rest of the world, right? So like mobile money, rest of the world, it's a solution trying to find a problem. What's the problem, right? We have a card, specifically NFC. I mean, it's so easy. Why do you really need mobile money? Now, of course, we know Africa is very different from that. It's the same with card readers like Zecco. These guys, they have now 70% of their customers could accept cards before. Even SMEs, anyone that needs to accept payments in the developing world. Of course, iZettle is a big company now, but there is the opportunity to build now where you have a whole bunch of, like a blue ocean of customers that have never used a digital payment product is not there anymore. So we see a lot of opportunity. Now, that's on the one side of it. So we see that the market is actually way more interesting. It's difficult, but way more interesting than it's in other regions of the world, more developed regions of the world. The other thing is, for us, I mean, many really great investors would love to be in Africa, but they can't. Right? They can't get it together. Their charters doesn't allow it. Like their LCs would say, why? LPs, sorry, would say, why? Why would you go to Africa, right? There's so much opportunity out here. So we're a small player, very focused, out of the Netherlands. In Africa, we can actually invest in the great companies. Like Zecco is one of the very great companies. I'm sure if we would have been in Silicon Valley, right? If they would have been in Silicon Valley, we would not have been their investor because there's so many others that invest there. So we see Africa as a great opportunity where actually the competitive field is very, very good for us. And it's also because of the way what we are, right? We have no strings attached. We can just decide we're going to be in Africa. And that decision itself gives us a lot of competitive advantage.
And can you please, for all our listeners who are not accustomed to thinking of Africa in terms of best practice, in terms of rigor with regards to focusing on fundamental metrics and growth when it comes to building a successful company, please share some of what you shared in the press launch when I heard you speak about the team at Zecco and what you found there and what impressed you and what led you to invest, and also just compare that with the sort of rigor you might apply to considering a good prospect in somewhere like Silicon Valley, for example.
That's I think a great and very relevant question. So there's lots of opportunities, and we are a small team. So someone pointed me to Zecco and said, I know you guys are interested in Africa, and you need to look at this opportunity. Now the MPOS space, mobile point of sale, is a difficult space, right? So it's been Square was a big hit, and then everybody believed in it, and they didn't believe in it. In the end, it's a great company, of course. So, but it has been tried everywhere in the world. It turns out to be pretty hard, right? Payments is low margin business. So if someone says there's an MPOS company in South Africa, you need to look at, it's like South Africa as a market, how interesting is that? Then it's MPOS, how interesting is that in itself? So I was not like really paying a lot of attention. And then this person kept telling me, you need to look at this. So I started looking at it, and first of all, the reporting that I got in front of me was of a quality that I hardly see anywhere. And it's like literally all the way they reported their key indicators, the way they've been thinking about what do these guys need to see to understand what we're doing was of a really, really high level. I think that for me is already like a great sign. If people have so much analytical insight, they really know what they need to look at and how to present it to you. But then the second thing is what those metrics actually showed, right? It showed that this was a team that had been really working very diligently, getting all their bases covered, and testing. And then when they found what the right mix was for them to grow this product, they really put their pedal to the metal. And really started growing it. So if you look at the metrics that these guys have on, what the cost of their customer acquisition is, how the activity rates of the merchants that use their products. It's really, really high. It's not dropping off. How they keep the margins high. To me, that was really exciting. So having been an entrepreneur, I've done three startups myself. It's, people can have the greatest ideas, but showing real growth with customers that then, like after half a year are still using your product, that is still, it's exciting to me. That is truly impressive. That's the hardest thing to do. Growing at the wrong economics is also easier, right? You can spend a whole bunch of money and get people to buy your product because you advertise the hell out of it, and then actually then it all starts dropping off. So I saw these metrics and they really impressed me. So that was, it's a big trip to come. That convinced us as a team to come over actually and spend 2 days with these guys, and we spent 2 days, and they went through their business, and we always let it to the company to spend the days as they want to spend it. That says a lot to me. I'm not telling them you need to show me this and this and that. It's like, you do what you need to show me for me to understand this business, and the analytical rigor and the levels of thinking that these guys have put in every single aspect of the business, whether it's their customer acquisition, or their brand, or their operations, or their finances. It's totally best in class, which made us really excited, and immediately decided that we wanted to be part of this company. So I just came out of my first board meeting yesterday, and I literally have been taking notes, and I'm going to talk to these guys if I can use some of this to actually work with some of my other companies and say, guys, this is, when I talk about, how you can really run a data-driven, analytics-driven business, and how you can take your board and your employees with it to actually to go on that journey with you, totally data-driven. This is how you need to do it. So I think these guys are absolutely totally best in class, and it's also interesting, also the way they think about culture and the way they think about how to build it. But again, if you can think about, and we all know great culture is what builds a business, right? So, and they're thinking really hard, how can we scale this and grow this and keeping the culture and keeping like the highest productivity and keeping people happy. So they do that as an analytical game as well. So the way they measure this and act on everything and their findings, like weekly polls that they do, and then that's how they, data they use to see how they can improve work life for their people and all that. That's totally best in class. So I think it's interesting. You go, maybe you don't expect from the outset that you go to South Africa and find a company that actually is totally best in class in a lot of, the way they run their business. But that's the way it is. And I think that's where Africa is at the moment as well. And we see lots of great entrepreneurs, and they basically, I don't think that you'd necessarily find any better in either Silicon Valley or other parts of the world.
Why is it so difficult to imagine that you'd find that sort of quality in South Africa? What's affecting the mindset, the investment perspectives, or the investment mindset? What's keeping it from seeing Africa as a serious investment destination, do you think, in your opinion?
Yeah, so there's a few things. One, I think that it's not only Africa, right? It's also in Europe. It's true that, like Silicon Valley, quality is also because everybody's there and they've all been doing it, and people are and startup, and you have the whole investment ecosystem that supports that. The quality of how people build their businesses on some of the basics of that is often higher than outside of Silicon Valley, right? So it's also you wouldn't expect it to find it in. I think what I find here, I think is really best in class. I'm not just saying you don't expect that in Africa. The other thing is, I think it has to do with maturity of ecosystem. Why do we expect a high level of quality in Silicon Valley? Because they've been at this game for a very long time, and that whole ecosystem is very mature. So in ecosystems that are not so mature, you don't really expect to see that. And like literally, we had it in the Netherlands as well. So in the Netherlands, when there is like most 10 years ago, most law firms did not have a standard term sheet. I think many still don't have a standard term sheet. So you go there as a customer and you say, I need to have a term sheet for an Series A investment. And they really start to think, all right, how shall we make a term sheet? Well, in the US, there's a standard term sheet, right? You don't spend money on the term sheet because that's totally standard. So, and that's because that whole ecosystem has matured. So, and I do think it's true that if you go outside of that, and either it's in Africa, but we invest in Asia as well, you do see that there's more work, right? Because, like, say a standard term sheet for a Series A round, like you have an investor gets preferential shares with a liquidity preference and some anti-dilution protection and all that. So if you look at that and you read it and you're not very knowledgeable about this whole thing, it reads pretty badly, right? It reads like, wow, why are they more important shareholders than we are, and all that discussion. And I think that, going to Silicon Valley, you don't have to go through that discussion at all. And now I think there's a global ecosystem, right? So people, because of podcasts like yours and whatever, everybody's listening to the same. So everybody is getting educated. But what you do see is that it's just easier to be somewhere where people have been doing this for a long time, and there's a shared understanding of all the basics, and people know what's like, this is the normal, right? And that's and this is aggressive, and that's like, this is founder friendly, and this is. And all those, that makes it easier to do investments in more mature ecosystems.
And so let's talk, now we just talked about Europe, let's just talk about some of the things you wish, having been in Asia, having invested now on the continent in your second startup, and probably having your eyes in other developing markets. What are some of the things in terms of the maturity of developing markets ecosystems, or at least the tech and innovation ecosystems, the startup ecosystems? What are some of the things that you wish would catch up quite quickly to suit your investment appetite or your sense of where you'd like to see things go?
So there's a few things. I mean, and this is Sub-Saharan Africa more specifically, maybe, but it's. As a venture investor, you invest in, the logic is, I buy a little piece of your company. You actually don't get money in your pocket, but we put that money in the company. And then you have less of that company, but we grow the company. And so the stake that you have left is going to be worth more. And then we do that multiple times, right? And this is going to be a journey. It's going to take 5 to 10 years. And then you, hopefully, if we're all successful, you end up with a smaller part, might even be a small part of a very big pie, right? That's the game. Now, and then we sell it, or we IPO it, and then we all, have done well. We've had a successful entrepreneurial experience. Now, this is, if you're in Silicon Valley, and I lived in San Francisco, then like the guy next to me and on the other side of the street, and they all done it. They either had options in a company that did this journey, or they were entrepreneurs and they made a little money, and you see it. In Sub-Saharan Africa, this is a harder sell, because it's like, whoever did this before, right? How many people can you point me to who went on that journey with you, and like with you or with anyone else in this venture, in like venture funded model, and came out well on the other end, right? It's a big leap of faith, 5 to 10 years. What could happen in 5 to 10 years? So I don't know whether it would help everyone when we get through this first cycle of successful venture-funded companies going through good exits, and actually have entrepreneurs that had a good experience doing this and being examples for the market. Because there's still quite a lot of skepticism, I find, in willingness to dilute for very long-term, say 5 to 10 years. So that's one. For us, but this is not going to go away. I mean, all the capital constraints, also in South Africa, the currency risks. I mean, that's a big thing, and we choose to not take a big point of view on that. If we couldn't invest here. But if you have a fund that actually has a 5-year time frame, or a 7 years time frame, a currency risk is even another animal, right? You know that if you end up on the wrong side of this currency thing after so many years, and there's huge fluctuations, that makes it very hard. So that's one. I think that on the lawyer side, we need more. I think that
more specialized legal advisory.
Yeah, so if you want to help an investor and a company doing a Series A round, that is a very different thing than helping a large company do an M&A transaction, right? And the cost should be different, and the way you look at documents should be different, way more pragmatic. I mean, all the reps and warranties, for example, in a startup, like if there's hardly anything, you can make documents with 20 pages on reps and warranties, but there's nothing really there, and the founders don't have money. So, and I think all that, and I've seen the same happening in Europe. That is tough. You need to get some lawyers that actually can do this. That you can do around for a few $1,000 instead of spending $30,000 on legal costs for a smaller round. So I think those are kind of the things that would really help.
Okay, that's very insightful. Last question, perhaps. Is there a pet trend globally, maybe on the continent, that you're particularly excited about? And why? A tech trend.
A tech trend. So we look at fintech only, right? So
I suppose, let me rephrase that question, because you're clearly excited about fintech. Is there a trend outside? I mean, it could be anything. It could be in agri-tech. It could be AI, whatever. Like what sort of gets you going, when you're not thinking about fintech?
So I'm okay. Now we're going back to fintech, but there's one I'm very excited about blockchain.
He's hopeless.
I'm very excited about blockchain, about Bitcoin. Now, I'm very excited about that as me, being a bit of a fintech geek and believing that this will change the world in a very, very significant way.
And are you aware of how excited the South African Reserve Bank is about it? And I mean, they're talking about possibly creating a parallel e-currency to, similar to Tunisia and Senegal.
Yeah, and that's, I think, there will be many initiatives like this. And the problem is we haven't figured a way out to invest in it. So although I'm extremely excited about it, and our whole team, Willem as well, but we haven't found a way to invest. So
you don't think Bitcoin is turning into a legitimate asset class?
Actually, I'm an investor in Bitcoin myself, because I do believe that. I think that there's a place for Bitcoin. It will not be the global currency change. That will not happen, but it will grow, and it will have a place, and it will stabilize, and it will be an important means of payment currency in a niche. Going forward. And that niche, the great thing about currency, you don't have to have a very big niche to be like a very big currency, right? So
ask Singapore.
Yeah, right. So I totally believe that Bitcoin has a future and will be there to stay. And on blockchain, I think that I also, personally, I have a bit of a bet on Ethereum. I think that's going to be one of the ecosystems that could win.
Which again, the South African Reserve Bank has been experimenting on, which is fun.
So there's one, and then the other one is AI. Now it almost blows my brain, right? What the opportunities there are going to be. And it's also a bit scary in a way, because it feels like that everything we've known and all the investments we've made, AI could change everything on that when it really starts to hit. So
do you mean that in Elon Musk terms? Because speaking about him as an extreme sort of futurist view, or do you mean more like day to day in terms of how AI might be doing more than it's currently doing in, say, your iPhone? What do you, in terms of where are you on the scale?
So to be honest, I'm a little bit, I think that the exponential growth of computing power could really mean that we create AIs that are 1,000 times, 1,000,000 times, 1,000,000,000 times as smart, 1,000,000,000 times maybe, but 1,000,000 times as smart as we are. And what that means is very hard to say, but I think that we want to control that in some way. This could be, this is something that goes beyond anything we've done before, right? So I'm there a little bit with Elon Musk. We need to really be careful about this stuff. And the other thing is that I do believe that AI is just going to change a whole bunch of all the things we do. AI is, so people say robots are going to change the world, right? Now, I think robots already changed the world. If you look at what's happening in the US with Trump, why are people feeling so bad? It's not because their jobs left to Mexico. It's because of automation, and the automation is robots. Why, I don't know why we don't call it robots, because literally it is robots, right? Now we're going to take that to the next level. And now a self-driving car is a robot. right? That's a robot, and it drives itself at some point because of AI, right?
And Ford clearly knows that. They're betting $1 billion on that.
Yeah. So absolutely. So AI together with robots, I think it's going to change the whole world, right? It's going to be really something that's. I'm not only excited about it. I think that in 10 years' time, the world looks so much different than we are now, and that's really exciting.
Well, thank you very much for chatting to me. It's been a pleasure.
Oh, thank you so much. It's been a pleasure to be here.